Hi, I'm Andrew Overman from Location, and I'm joined each week by Michael Webb of Mortgage Republic to discuss your burning mortgage questions. And this week we have a question from first-time buyers, which is asked quite frequently. How much deposit, Michael, do I need to buy my first home? That's how much deposit do I need to buy my first home?
So this will change from time to time, and you need to obviously to check, especially if you're watching this on replay in a few months' time or a year's time. It's a very fluid answer. So depending on the property you're buying, you could borrow 100% of the amount that you're buying. So when we look at shared ownership properties, as I sit today, there are lenders who would lend you 100% of the value of the share. Okay, so you wouldn't need a deposit, you would just need your legal fees. So a couple of £1,000 would probably cover your fees, £2,000 to £2,500 fees, mortgage, legal, all of that. Again, there's criteria on that, and there's some housing associations that don't allow you to borrow 100% of the share. So the short answer is, if you really want to and you want to buy shared ownership, you could do it with no deposit. Very typically, if you're buying in the open market, a resale property, you'll need a 5% deposit based on the affordability worked out from your income and outgoings. So as a minimum, most people are going to need to aim for a 5% of whatever they're looking at. However, obviously there's affordability criteria there. What you will find with lenders is the more percentage deposit you put down, typically the more lenient they are on their income multiples, and therefore they will push further on what they will lend. You will find a lot of lenders at 5% will limit, broadly speaking, your affordability to about 4.5 times your salary, irrelevant of what your salary is. However, there are lenders that would go upwards of 5.5 times if there was bigger deposits going down.
So let me ask you a question, if I may, Michael. We're sat now in spring 2022. Inflation is spiraling out of control. Effectively, any savings money in the bank is being eroded. If you've got a 10% deposit, is there any value in holding back half of that deposit for rainy day money, or would it be better to push the whole 10% deposit in and perhaps get a more flexible lending criteria or a slightly better rate?
Well, you're definitely going to get a better interest rate, and therefore the deposits the products typically go in 5% chunks. So for example, if you're putting down 5% or you're putting down 9.9%, you will still pay the same interest rate. Yeah, so you have to hit the 5%, but there will be a marked difference between a 95% mortgage and a 90% mortgage in the rates that they will be charged. So what you have to look at is your own situation of, do you need to sit on some cash for, like you called it, rainy day money? How quickly you could recoup some rainy day money savings if you needed it. I mean, there's an argument that it's raining pretty hard at the moment with cost of living and things like that. So people's rainy day money is probably getting eroded anyway. So I guess the argument is, if you're getting nothing in the bank, because you will, if inflation's 6-7% and you're getting 0.1 on interest rate, it's eroding away its ability to buy. You might as well utilize it for something that's going to have benefit, which is reducing the interest rate and buying more of the property. Because the reality is, it's not growing, it's depreciating in value. Mm-hmm. And to explain that, if you had £10,000 in the bank at the end of the year, so to speak, at the current inflation rates, whilst you still have £10,000 in the bank, it would only buy £9,300 worth of materials that it would have on the beginning of the year. So it's eroding away pretty quickly, its buying power. So you are better off to get it into a property, in my opinion, and reduce that interest rate.
Brilliant. And just one final question for you on deposits to buy your first home. Are there any 100% mortgages out there at the moment for the resale market? So I'm a first-time buyer. I want to go and buy a new build, or I want to go and buy something, that's 2 or 3 years old here on Cloverfields, for example. Can I do that with zero deposit?
No, there's no 100% lending. That would make the housing market explode even more. So there's no intention to bring that back, not at the moment anyway. There is the possibility within some lenders' criterias that you could go and borrow your deposit as an unsecured bank loan over 5 or 10 years, and they will factor in that payment into your affordability. There's not many of those, and they're not particularly active in advertising that it's within their criteria. So I'm not going to name them here, because that can be withdrawn from their criteria immediately without any notice. And like I say, they don't overtly advertise this, but any broker who works with first-time buyers and understands the lenders they're working with should know the lenders I'm talking about. So there is the possibility to borrow 100%, but you'd need to go elsewhere to borrow that. And of course, you can always get gifted deposits from parents if they're in a position to help you. We're also seeing the parents with the problem that we've just discussed with savings, that actually they're seeing that it's not doing anything for them. So they might as well utilize it helping their children and getting that money into a property. Now, whilst deposits are gifted and they should hold no interest in the property, there should be no repayments, and they'll need to write letters and sign in accordance with this. That's not to say that when you sell the property moving forward, that if you wanted to, that you couldn't pay your parents back by your own choice rather than something that's contractually in place. So parents are looking at helping children more frequently, we're seeing, because their savings are doing absolutely nothing for them.
Brilliant. That's a question that we'll be answering in more detail next week. So if you are a parent looking to gift a deposit to a family member, then do tune in at same time next week. But for now, I'm Andrew Overman, he's Michael Webb, and we're answering your burning mortgage questions. Thanks for watching.